It's Thursday the 26th of March. I haven't been doing a lot of videos recently. Reason for that is that basically it's been utter chaos, and trying to make some sort of technical sense of the markets hasn't been easy. But here we go. I'll just do a quick run through now. This is the weekly chart for the Aussie dollar, and we're obviously in a bear trend, so there's nothing really else to say about that. New Zealand dollar has obviously also collapsed against the US dollar. US dollar very strong at the moment, and even if we were to bounce back, there's no significant levels until we get to previous lows from 2015 and 2019. So we'd have quite a long way to bounce before we got to 6,200. So really, you know, when you get these sharp moves down, it's very difficult to gauge any levels, certainly on the longer term charts. Weekly chart for the dollar yen is just horrible from a longer term perspective if you're trying to find a decent trade. As you can see, it's not easy at all. We're just going sideways, and even the moving averages aren't really having a great effect. Even looking at the daily chart, I don't know if you can make any sense of that, but I can't really. So I'm looking at very short-term charts in order to try to get some levels that work. You can see that the green 500-day moving average is having some sort of effect. The red 200-day moving is having some sort of effect. But yeah, these daily, weekly charts not giving a lot of information. I've really got to drill down to the hourly chart for this market to try to make any sense of it. Similarly, the euro versus the yen very much in a big sideways trend for most of the last year. And again, I'm having to drill down into the hourly chart, really. Even the 4-hour chart's not really giving me much indication of levels in the short term, but I think the levels have been working in this market. Weekly chart for the euro, obviously very, very volatile. Dollar's been seeing some strength lately with a small pullback, so that's been reflected in the weekly chart here too. Daily chart not really giving me any clues or any information at all. I'll show you the short-term chart, the hourly chart, which is where, as I say, I'm having to get most of my information from nowadays. And the fib level's working fairly well. You can see the 108.36, 23.6% level certainly worked yesterday, not the day before we spiked above it. But now we're breaking above a trend line which is about 2.5 weeks old, and the 200-hour moving average, as the 100-hour moving average gets a little bit more positive and does act as good support. So this is really where you want to be looking on your hourly charts, I think, at the moment with such extreme volatility. You can see we're holding the 200-hour moving average, but there's a chance we can probably break higher now, especially as we've got through that 23.6% fib and that trend line. Looking a little bit more positive. Clearly, we have to get through 109.00, and then we're away, and we can run up to 109.60. If we got up to 110.60, that should be quite good resistance with the 500-hour moving average there. Sticking with short-term charts now, for obvious reasons. The gold chart, 1-hour chart, you can see we're ranging nicely from the high at 1635 down to the first Fibonacci support, 23.6% fib at around 1592, coupled with the 500-hour green line moving average there, offering really good support. If we were to break down, then I would suggest we go to 1565, by which time the blue 100-day hour moving average will have caught up to that level. Notice we've got a bullish cross on the 100-hour on the moving averages on the hourly chart, and I had suggested a day or two ago that gold could rally after holding, let me just have a look at that, after holding what was important support on the weekly chart, the 38.2% fib at 1451, 1452. I suggested that would be a strong support level, and look at how we bounced right off 1451 to the point. And this all looks quite good now. I'm guessing that as we focus into potential inflationary measures from this unprecedented money printing, and obviously worries over stocks still, even though we bounced back, gold being seen as finally benefiting from safe haven status now that these margin calls may have been met. Back to the hourly charts for the Canadian dollar versus the US dollar. It's a bit of sideways action, but we've broken back below the 100-hour moving average and now the 200-hour moving average, the red line, and these trend lines. So this is looking a bit more negative. I didn't really think that would happen, to be fair, but it did. And you can see that level, I had this on my report, 144.00, 143.80 as a good support level, and certainly worked a couple of times. And then we finally broke, and obviously it worked as a good resistance level coupled with the blue 100-hour moving average. So now we've broken down through the next support level. We didn't even pause there. Well, we paused at the first time, maybe. and then we broke. So now we're looking at quite a negative scenario as long as we stay below 143.00, and I'd be obviously looking for 140, 130, 140, 110 as the next target and support. Not a strong support level there though, so wouldn't be surprised to see further weakness. In fact, not sure how that ties in with the fundamentals, because actually the dollar chart doesn't look bad at all. But anyway, talking of the dollar index, let's finish up on it. Now we peaked just below the previous 2017 peak at 103.82. We didn't quite get there. We got to 103, nearly 103, yeah, 103.00. So you could argue that that is one enormous double top pattern. You could argue. I'm not sure if I'm going to buy into that one, but there you go. It's my job to tell you that. Let's have a look at the daily chart. I don't think we're going to see any information on the daily chart that's going to help us. We've just seen that big spike up. So again, we've got to go to the short-term charts now in such volatile conditions to try and make some sense of some trading levels. And not too bad here. Again, the fib's working nicely for me. 23.6% fib at 101.00 offered really good support. So we've just been trading in a range there, but now we're perhaps just starting to break down. 200-hour moving average moving up towards that 23.6% fib. So that's sort of a line in the sand for the bulls today, around 100.75. We start breaking down below there, then we're going to see a more significant correction in the dollar index, probably headed towards 100 to 99.80, shall we say. Oil's absolutely crashed, of course, but much more stable in the last few days. Over the last week, in fact, as you can see, the range is narrowing and we're trading sideways quite nicely on the daily chart. On the weekly chart, that's not really going to give us much more information. We've obviously absolutely collapsed. Where are we going to? Levels not seen since 2000, just after the dot-com crash. So pretty nasty there. I can't really comment much more. I'll show you the short-term chart, but considering pretty much every sort of transport system in the world seems to be shut down now, not many people are using oil much at all, we're actually quite stable. Okay, onto stock markets. E-mini S&P now. As you know, I keep my stuff very simple. Fibonacci, trend lines, moving averages, a bit of slow stochastics, patterns, candles, formations, that kind of thing. I don't go into any overdo it with the indicators, but moving averages over and over again, they do prove themselves to work. You never know which one maybe will work, but they certainly do work. Excuse me. So the 100-month moving average was the one that caught the big crash this month as we hit 12,170 was the value and 12,174 was the low. So worth noting that in the E-mini S&P. In the short term, I'm going to have a look at the daily chart for the short term because these markets are so volatile. We can't drill down into too short a time period. This is obviously the bit that matters. Now then, we're back up through the 23.6% fib, which initially held a couple of days ago. That was Tuesday. Wednesday we spiked above it, and now we seem to be holding above it. So this is actually looking pretty positive. The stochastics were so oversold, we finally managing to ease that. So I think I actually favour a further bounce. The moving averages on the hourly chart are just turning positive, which gives us some hope. The price is trading above the 100 and 200 hour moving averages, which gives us a little bit more bullish hope. So can we break up through 25.60? I think we probably can. That matches a little spike high up here at 25.55. So 25.55, 25.60 obviously is the resistance level for bulls to beat. And then we could even head up towards 26.40, 26.30, 26.40. I think that is where I'll be selling. I don't trade very often these days, but I think that's just too good to miss. I think we've got to give it a go up there. I just can't see how these stock markets, I can't see how this crisis is over. I can't see how 25.45 is a very good trend line going back to 2009, the low of the last global financial crisis, as we enter a new one. So that ties in fairly nicely, doesn't it, with, well, 26.41, okay, 100 points lower. So that's probably why we're pausing here, actually. I didn't spot that before, but that's clearly why we've got a resistance level from that trend line, which I've highlighted to myself in green and then forgot to tell you about, but that's at 25.45. So that, I assume, is the reason why we held that yesterday. So we're going to have to get up through that trend line to get to 26.40, and I think that would be a nice selling opportunity. The other reason I like 26.40 is the red 200 week moving average, which is coming in there just below the previous week's peak at 26.75. So if you're selling it around 26.40, you want it to hold below 26.75. We want to be out of shorts above there. That would risk further gains, possibly up to 27.28, but we'll worry about that if it happens. It was the 500-week moving average that caught the plunge in the E-mini Dow Jones, seeing now a bounce back to these trend lines around there. Let's just have a quick look at the monthly chart. The monthly chart only shows how we held the 50% fib, which I know I notified you of in my report at around 18,000, and then we rallied off that. What is the daily chart telling us? It's telling us that we're in a recovery. I'm just looking at the short-term charts as I speak to you. Of course, similar situation with the hourly moving averages looking more positive, and as long as we hold above 2800, 2700, we're looking good. We've got strong resistance at 22,350 to 22,450. That would be my sell level in the Dow Jones. And I think there's a good chance we'll see it. The DAX support was a beauty. We had that trend line going back to 2016, and we had the 200-hour week moving average coming up to meet it just around the 6,600 level. You probably will remember me talking about that. And we bounced off it nicely back up to the 100-week moving average at 7600. So there's a bit of resistance there. I would suggest that the strongest resistance of all, well, 500-day moving average at 75.57 is having certainly effect on the close, although we did spike above it yesterday. So watch that 75.60 level today. If we get up through there, we should revisit 77.58, which was yesterday's high. It's 7800 to 7850 that for me is the sell level, which will probably tie in with the Dow Jones and the S&P levels if we push higher today. That was the Nasdaq chart I think I looked at just then. This is the DAX chart. DAX chart, okay, 500-month moving average, catching that move there. So you can just see how these moving averages really acted as good support levels. As I say, you don't know which one on the weekly chart or the monthly chart is going to work, but in hindsight, that was the one that worked for the DAX. Nice strong rally back up. We've got the resistance at 10,370 there if we bounce back to the 100-month moving average. But right now we're struggling at the 38.2% fib at 99.14, coupled with the 500 weekly moving average at 98.66. Do I think we've got a little bit further on the upside? Well, we could do. We could get to sort of 10,000. I think we could get to 10,200 to 10,400. And if we get there, I think that definitely is worth a sell. I just don't think that this is the beginning of a bull market recovery. I think this is a bear market bounce. I think we've got probably another leg down. Certainly a retest of these low levels. If we retest these lower levels that I'm showing you that bounced off these various moving averages, then I can start to think that we have a double bottom and that we can run. But what concerns me is I don't think we're anywhere near the peak of this epidemic, so there could be room for another panic and another leg down before we see the bottom.